let's talk about what the services might look like. So what does that advisory service look like at the end? So one could be, and these are just ideas, it's not limited to this, but one could be design and create reports that contain information about potential areas of concern or risk. So instead of just giving a P&L and a balance sheet, could you create a report that shows trends, and those trends are pointing to, hey, this part of your business, this department, this product is not becoming as profitable. You are bleeding on this area, on that area. That's what a custom design report designed to point out potential areas of concern or risk mean. The next one is forecast. What if we take a forecast of future sales? If our sales go up by 20%, what would be the effect on those expenses, right? And what about capacity requirements? Could we even take a 50% increase in sales? If we have an increase in sales of whatever number, 25%, what kind of permanent investments into our infrastructure, into our payroll, do we need to make in order to be able to meet those demands? That's what forecasting future sales, expenses, and capacity requirements mean. Now, forecasting capital requirements. So if you are going to, for example, undertake a new big client, so this small business never sold to a big box store, and all of a sudden they have a big box store that's buying from them, the sales are going to quadruple, quintuple. It all sounds like a great thing, but what happens with the payment terms? This new customer might have payment terms that are not that flexible, where the customer, your client, is being very flexible with the customer and is telling them, is allowing them to pay in 90 days, and they're not used to receiving payments so late. So what kind of financing requirements, short-term, factoring, lines of credit, whatever it is this business going to need so they can sustain cash flow-wise this new influx of business that's going to have delayed accounts receivable? Those are capital requirements, really important. Also, forecasting cash flow. Could you predict that at this particular rate, you're going to run out of cash in a month, and you need to be proactively be looking for an injection of capital? Or can you afford to give your clients that much credit? Or can you afford to pay your vendor right now and get a discount versus paying them right there on the due date and keep some of that cash afloat? That's what forecasting cash flow it's all about. What about identifying patterns? What behaviors from business team members, or what transactional financial behavior it's showing a pattern or a trend that's bringing the business in a particular negative or positive direction. Sometimes identifying positive patterns so you can bring them to the open, make sure the entire team is using them as best practices, and you're acknowledging great team members from doing that. That is going to allow you to repeat those great things and grow the business in that positive direction. Same thing happens if these behavioral actions that you are identifying in the service are bringing the company into a negative trend or a negative result. Obviously, you want to nip it in the butt. You want to cut the head of the snake before it gets too big, type of thing. You want to catch those things early. There's tons of value on you providing that type of proactive advice on identifying those patterns. Also, provide decision support tools, not just historical clarity. Remember, a great accounting system will give you accurate financial reports, which is historical clarity. But an accounting system that also gives you KPIs, we'll talk about KPIs, but it gives you KPIs, that gives you ratios, that gives you trends, that will provide a decision support tool. So it's no longer a financial statement, it's now a tool in order to confirm the gut feeling decision that the management team wanted to take in the first place, or maybe unconfirm that gut feeling decision that they wanted to take. So that decision support tool element of turning or transforming the traditional, here's your financial statement versus here's a report that provides insights about what you must do moving forward. And the last one is provide information not available in the financial statements. Information like how many customers are walking into the store. Of those customers, what percentage are walking out with something? of the ones that are walking out with something, how many units per customer are they walking out with? Are customers buying the first thing that they wanted to buy, or are they buying the first thing and some sort of accessory, some sort of add-on, right? Those are the things that you might not see in financial statements, but are very much tied to accounting systems, point of sale systems, and ERP systems. So that's a great list for you to start thinking about. These are the type of services I could provide for my client. Now, in the book, Measure What Matters to Customers by Ron Baker, he's got a great line that really, really confirms the value of proactive accounting, which is running a business based on financial reports is like timing cookies with your smoke alarm. What that means is, look, if you're managing a business based on financial reports, it might be too late for you to make a decision and change the direction of that business. So let's move on to part 2. What are advisory services? So we broke down the list of services by giving them a title. And I think that when you give those services a title, you can give a framework to what is included or not included in that service. So I'm going to talk about them briefly. I'm just going to describe one by one so you can start thinking about, oh, that looks like something I can do, or that looks like something that my customer is looking for. Let's start with coaching. So coaching is when you don't tell the client what to do, you don't suggest what they should do, you help them think through their own ideas. So coaching is about asking the right questions that would allow that business owner to answer them on their own, for them to answer their own questions by you asking more questions. So coaching is all about asking the questions that would evoke the right train of thought that would allow the small business owner to make that decision on their own. Now, mentorship, that is to tell someone what to do or suggest someone what to do. So if you were to mentor a client, it's because your client admires your ability to run a business, even though you are in accounting or you are an advisor and you might not be doing the same thing they're doing. Your client might be a restaurant that has nothing to do with running an accounting firm versus running a restaurant, but maybe they admire the way you manage your business financially, the way you manage your employees, the way you price your services, the way you run your marketing, whatever it is. And your client might want to hire you as a mentor on the specific area that you do really, really well, because they want to do things the way you do them. So very different than coaching, but and many times people confuse the two. Mentoring and coaching are not the same thing. And it's very difficult to draw a line, in the practical world, to draw a line and be just a mentor or just a coach. Many times a mentor or a coach kind of plays both roles, but when you give it a name, when you define it and you ask your client, hey, what role do you want? You want me to be your coach or your mentor? And you describe them separately, your customer will tell you how they picture that advisory engagement and what it would look like and what they envision it to be like, so you can have more deeper conversations about, hey, what my role is going to be here. Now, strategic advice, that's a little bit of a cross between coaching and mentorship. Strategic advice really is about thinking hard about the current business's business model. Who are their key partners? What is their target customer? What is their employee talent pool? How is the company organized in terms of the org chart? Are the right employees in the right place to perform the services the right way? What's their warranty like? What are their marketing claims, their messaging? Basically, everything that has to do with how that business runs and operates is strategic advice. And a major change to that sometimes requires both the business owners and an outside perspective. So giving strategic advice could be really valuable. Another one that's very, very common and very typical is this concept of a contract CFO or a virtual CFO. So a contract CFO would be playing the role of a CFO for the short term until the full-time long-term CFO is hired. So if you have a client that lost their CFO, or they're big enough to afford a CFO, but of course you're going to be remaining independent after you leave that short-term contract, you can actually play the role of CFO for 6 months or whatever until they can hire their own. Many contract CFOs also take it upon themselves to help hire that replacement, help hire that permanent CFO. Now, virtual CFO is different. That's when the company is not big enough to hire a full-time CFO, and basically they'll hire you as their part-time or virtual CFO. So maybe you 1 day a week, you play the role of a CFO, but then the other 4 days you do other things that have nothing to do with that client. So that's the difference. Contract CFO typically is a full-time position for a short term to bridge a gap until they're ready to hire a full-time CFO, and a virtual CFO is typically a part-time position, but playing that CFO role. There's also CFO Level Consulting. When you're the contract CFO or the virtual CFO, you will have certain fiduciary responsibilities. As the CFO, whether it's contract or virtual, you might be signing documents and signing contracts, getting that business engaged in services with other contractors or other companies. Where when you provide CFO level consulting is when you provide all the advice, all the help that a CFO would do without that specific responsibility. There's a big difference in terms of the personal risk an accountant and advisor will take as a contract CFO or a virtual CFO, because in both of those situations, you might have fiduciary responsibilities where a CFO level consulting will not, and will give advice to the COO or the CEO, executive vice president, whatever it is, will give them advice as if they were the CFO, but not taking on that responsibility. So there's some small nuance separations there, but it's important to give it a title, give it a description, so the client understands what their expectation about your role is going to be. Then we have management consulting that we discuss. That's about helping not so much the executives, because the executives would be CFO and a strategic advice. This is helping the actual managers, the actual field managers, the actual key employees that manage whole departments or whole teams, helping them run their business or their sub-business, their departments better. So coaching and advising, not so much the business owner or the executive, coaching and advisory, that mid-level management position, because these are the people that typically are executing the strategic advice. So management consulting, it's about helping the team execute versus helping them think about how they're going to execute, which is more the strategic thinking. So management consulting is very, very tactical and usually looks at continuous improvement. So with management consulting, you're there to continuously help the team get better in a perpetual way. Project management would be sort of like a short-term version of management consulting, where you specifically know what the beginning of the project is, what the end is, you know what success looks like, you know what the end looks like, you can picture the project through completion, and your compensation might be tied to the ability to complete that project. One of the most common project management jobs you can think of or services would be implementing a new accounting system or implementing a new app or add-on on a new accounting system. As an advisor, you can take the add-on from inception all the way to training their staff, to helping them take over it moving forward, and that interactivity and integration between the accounting system and that app. But you basically leave or finish the project once it's completed. So in project management, the end result or the duration of the project is finite, where in management consulting, it's more of an ongoing continuous improvement. So again, it's important to define them all so you can give each of them a title. And when you're talking to your clients about what kind of services would you like for me to provide as an advisor, once you define them all, the small business client may come back and go, what I think I need is a virtual CFO. What I think I need is a mentor. What I think I need is a project manager. And once you give it a title and a definition, for the small business owner, it's easier to think about you as an advisor because they can finally put a title to it. One of the other books that I love is Flawless Consulting by Peter Block. Peter Block has a really, really great framework for talking to your client about identifying your relationship with the customer. And this tool is really helpful when the customer doesn't really know or have a really good idea of what your role needs to be. So what you can do is you can simply ask, what role would you like me to play? Would you like me to be a pair of hands? Would you like me to be a collaborator? Would you like me to be an expert? And what does that mean? Pair of hands means you mindlessly follow your client's instructions, regardless of whether or not you think it makes sense. You get paid for effort. So when a client says, I really need someone to help me catch up in my data entry, if you don't have this conversation with your clients, you're going to be seen as a pair of hands, because that's what they asked. They asked you to help them catch up with data entry. So if you never bring this conversation out into the open, you will be a pair of hands for the entirety of that project, and it'll be very difficult to have your client change the perspective of what you're going to be. Many people have great pair of hands type businesses, and that is okay. But do you as an advisor want to be seen like that? The second option is collaborator. Collaborator means you partner with the client to define the project or the problem per se and create and implement the solution. We work together. We work in tandem. Okay. And then we have expert. The expert doesn't do much work. The expert swoops in, solves the problem, and gets out, right? Leaving the customer better as they were before. So they solve a short-term problem or they make the problem go away, but they're not responsible for maintaining that solution working the entire time. That's where a collaborator and a pair of hands falls into place. So there's actually nothing wrong with being one or the other. It's just important to identify it. Again, when I mentioned earlier the expert doesn't do much work, I actually misspoke. The expert could do the work. The expert could provide the entire solution, or the expert could also give the solution for the client to do it themselves, right? The difference is, are you being paid to identify the solution, identify the plan to solve it, or are you being paid to come in, solve it, and get out? That really is what an expert is. And an expert gets paid for the results. That result could be, again, the executed solution to the problem or the written plan for the solution for the problem. It could be either or, and then you can revert back to the different service offerings that we discussed earlier. Now, one way to illustrate, or one great tool to use, is to use the traditional project management triangle, which basically you draw a triangle on a paper and you write expert, collaborator, and pair of hands in each of the vertices of the triangle. You define what pair of hands means, you define expert, you define collaborator, and simply you ask your client, look, now that you understand these three potential dimensions of my role or my potential role, where in this triangle do you picture me being for this project, for this issue that we're discussing? And you allow the client to just draw a dot. What do you want me to be? Draw a dot. Where you want me to be? An expert? Want me to be a collaborator? Want me to be a pair of hands? Want me to be a little bit of everything? You want me to be in between any of these? And then once that dot is drawn, once the small business owner thinking about you as an advisor tells you this is where I want you to be, whatever it happens to be, in your mind, you want to know those services that we discussed: strategic advisor, mentor, contract CFO, virtual CFO, Cfo Level Consultant, project manager, or management consultant, all the ones that we discussed. And this is not hard and fast rule, but depending on where that dot in the triangle is, one of these services might be more aligned to based on what the client's determination or what they want your role to be. Now, notice that coach is all the way in the side, like a son just sitting there, because coaches typically don't solve problems. They're there to help the clients think through the problem and think through the solution themselves. So the coach really is the ultimate hands-off type of advisor, where all the other ones are hands-on type of advisor, especially the project managers, the contract CFOs, CFO consultants. Those are the most hands-on because they're there every day making those sort of detailed, tactical level decisions. Where the three in the top, strategic advisor, management consultant, and the mentor, they're not as hands-on and they're more in that high level, strategic level. So again, these don't always fall into this spectrum of the triangle each time, depending on the context. These could be shifted around a little bit, but I think these are, for the purposes of this presentation, this slide is a really good representation of where most of these type of engagements land with respect to Peter Block's expert versus collaborator versus pair of hands framework.